This is Rick Ackerman. It's Tuesday morning, and I'm the editor and publisher of Rick's Picks. I do these market commentaries from time to time, usually once or twice a week on Facebook. Today, just a couple things I'd like to look at. If you're like me, you're not particularly trusting the rally in gold. I call it a rally, even though the Dow's off 37. When you consider how the week began, with an Iranian bombing of one of the world's major oil facilities in Saudi Arabia. There was a bit of a spurt Sunday night when the news hit. Actually, the news had hit earlier, but it wasn't until the newspaper editors got a look at crude oil futures, which shot up Sunday night, that they came to the conclusion that maybe something significant had happened. But if you've been watching the market the last couple of days, the importance of it seems to have faded. Crude has actually given up more than $3 of an initial gain of $8 or so. So the impact on global crude oil supplies and energy supplies has been very much discounted. And again, the Dow's down only 34 bucks. If these were normal times, I think the Dow would be down, well, much more than 34 points. So when the market is strong or not particularly weak at a time when we expect it, it's natural for us to infer that the price action is bullish. And I think that's what we have to do for the time being. But I want to show you a couple of things that are on the technical horizon, actually the immediate picture for me. Number one, in the industrial average, looking at the 15-minute chart, if the Indus were to fall to that green line at 26,845, that is about 200 points below where we are now. It would trigger a short signal. You could short it by way of the diamonds, but I would expect the move to go at least as far as the red line, 26,387. That would be about a bit less than about a 450 point downtrend. So there's potential here to get all the way down to 25,471. But what I would prefer to see is the market moving to perhaps a new record high, because I think that would be a great way for Mr. Market to set the hook to generate a bull trap, the likes of which we haven't seen in a long time. So I'm eager to get short in record territory, and I would do so by way of something I call a CI, a counterintuitive trade. If you want to know more about that, I would suggest coming over to Rick's Picks. I'll show you how to do that in a moment. So in any case, I am very wary of the stock market at these levels, and I'm just eager to short the broad averages. It's not as though the Saudi bombing is the whole problem here. We've got housing and autos having topped in the U.S. We've got Europe and China, particularly Europe, sinking into recession, and manufacturers index was off, suggesting that manufacturing activity in the U.S. is in decline, and for all we know, we could already be in recession. It's also September. September is traditionally the worst month of the year for the stock market, so it seems like a very unusual, very interesting time for the stock market to be showing such bravado. Let me take a look at gold, because it really will be the flip side of whatever we see in the broad averages. If stocks go up, then gold will tend to go down. That has been what's been happening for quite some time, presumably because the portfolio managers can't walk and chew gum at the same time. So if they are selling stocks, they're buying gold, and the reverse is also true. So we've had gold double top at very near this red line. It's what I call a midpoint hidden pivot. Those of you who have been watching these presentations for a while know that that is a logical place for a stall to occur in a rally. Gold has corrected pretty well since then, and it keeps threatening to break the point C low of the pattern, which is at 1488.90. We came within inches of it back on about a week ago, the 10th of September, but since then it's just been kind of hovering. I would like to see gold break below that 1488. This is basis the COMEX December contract before I jump on this, but I am prepared to see gold not come down through that line. In other words, reverse bullishly without having stopped out bulls beneath that point C low. So I like gold. One of the ways we're actually trading it is with GDX. If you don't care for the futures contract, this is a good way to go. GDX is a proxy for gold mining shares. A number of gold mining companies are listed in this index, and we've had what I would call a not too bad buying signal at 27.83. It says that it's going to get at least to 29.06, but we'll have to see what happens at that red line at, again, the midpoint pivot before we determine whether it's a good bet to go to 31.52. If, as is possible, GDX relapses and comes down below this 29.60 point C low, I would wait for it to get at least beneath this 26.04 low before I think about buying again. And we do have, again, the same entry technique, the counterintuitive trade for getting aboard. And if you want to know more about it, again, come on over to Rick's Picks. This is a picture of the chat room as things are going right now. It's the trading room. There's also a second room called the Coffee House, where the discussion is less. Well, let's see if I can get this to even come up. All right, for some reason, the Coffee House is a kind of, I won't call it rough and tumble, because we have a very polite and genteel crowd in there, but traders from all over the world. There are a lot of trading veterans, and the trading room in particular is a good place to come to share real-time trading ideas. These are things that are posted in a timely way that makes it possible for all of the subscribers to do the trades. If you're interested in seeing a bit more and you don't subscribe, just go to rickackerman.com. At the top of the page, you can fill in your name and your email address, click Start My Free Subscription, and you'll be able to access all areas of the site, including the touts, these specific trading recommendations, some of which are actionable, that are viewable only by paying subscribers. So again, to take a free trial subscription, no credit card information is necessary. Just go to rickackerman.com, fill in your name and email address, and you'll be taken right there. So that's it for today. I'll probably weigh in sometime later in the week, particularly if something interesting happens in the markets. And for now, this is Rick Ackerman wishing you a very pleasant good day.